Oregon.
The nation's top financial cop is stepping down. SEC Chairman William Donaldson surprised Wall Street today with his resignation. A look tonight at what his departure could mean to Wall Street.
A communications glitch ends trading early here at the New York Stock Exchange. Trading was halted just 4 minutes before the traditional 4 p.m. closing bell. At that point, the Dow was up 81 points.
Then, a triple threat driving sales lower to Detroit's big automakers. Will look at what GM, Ford, and Chrysler plan to do to boost sales after today's lackluster May results.
And these homes were built by the hottest home builder in America. We talk with Robert Toll, the chairman of luxury home builder Toll Brothers.
I'm Paul Kangas.
And I'm Susie Garrow. This is Nightly Business Report for Wednesday, June 1st.
Nightly Business Report is made possible by
Objective financial advice. It's right for any nest egg, regardless of size. A.G. Edwards. For 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective. Additional funding provided by the National Association of Realtors. This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. A surprise announcement from the chairman of the Securities and Exchange Commission. William Donaldson said today he plans to step down by the end of the month. Donaldson was brought in by President Bush 2.5 years ago to help restore investor confidence in the aftermath of numerous corporate scandals. Stephanie Woods takes a look back at Donaldson's tenure.
When William Donaldson took the helm of the Securities and Exchange Commission in February 2003, the SEC was perceived as too close to big business. The former NYSE chairman and Wall Street executive was brought in to restore investor confidence after the Enron and WorldCom scandals rocked corporate America. Donaldson told reporters that work continues.
A substantial portion of people are still view the business world as not a very attractive group of people in terms of their integrity. So I think there still is work to be done.
Under Donaldson, the SEC issued rules to require mutual fund companies to have independent chairmen, hedge fund managers to register as investment advisors, and that investor orders to buy or sell stock be filled at the best price. Business groups complain that some of those reforms have gone too far. The Chamber of Commerce has filed suit to have the rules tossed out that require mutual fund boards be independent, and the group threatened to sue over a proposal to give investors greater access to corporate boards. Critics are now focusing on who will replace Donaldson.
I think now there's got to be a renewed focus on making sure our capital markets and our economic system remains competitive, that we have a good, solid regulatory regime that fosters innovation and risk-taking. And so it's, you know, we fundamentally, he did a good job for that time, but I think probably a new kind of leadership is needed going forward.
Labor advocates worry a new SEC chairman could roll back investor protections, and they say this is a pivotal moment for the commission.
The question that's going to be in front of President Bush is he going to have an SEC that sits back and watches while CEOs and Wall Street Sharpies rip off American investors and rip off their Social Security money? That's what's on the agenda now that Bill Donaldson is leaving. Bill Donaldson's not that kind of man. He was really a champion for investors, and he will be sorely missed.
Donaldson told reporters he hopes his reforms will stay in place. He says the logic of the regulation should withstand any scrutiny. Stephanie Woods, Nightly Business Report, Washington.
Joining us now for some more analysis of Donaldson's resignation, John Coffey, professor of law at Columbia University. Professor, nice to have you on the program.
My pleasure.
So what was your reaction to the Donaldson resignation, and what impact do you think his departure will have for investors and for the business community?
This is a bombshell. I can't think of a moment in modern times when the future direction of the SEC is more up in the air. Depending upon whom the president chooses as the successor to Mr. Donaldson as SEC chairman, we could have a very significant U-turn. I would overstate.
What type of person do you think President Bush will be looking for to fill this role at the agency?
There are sort of cross-cutting concerns here. If he wants to avoid the U.S. Senate, he could take one of the two Republican commissioners, name them as chairman, and there would be no Senate confirmation, because the Senate only confirms you to the post as commissioner and doesn't choose the chairman. On the other hand, if the White House has a long enough memory, they may recall that Donaldson saved their bacon by restoring the credibility of the SEC after the SEC had gotten tarnished in some scandals during the end of the Harvey Pitt administration. And I would think that the White House, if it has a long memory, would not want someone who would be so controversial and so perceived as a free market libertarian that no one believed they were capable of protecting investors.
What would you say were Donaldson's biggest accomplishments in his 2.5 years?
Well, unlike Arthur Levitt was really a hell-bent for leather reformer activist. Bill Donaldson was more of a pragmatic accommodator and compromiser. He came in after a huge crisis. Congress had passed Sarbanes-Oxley, and within a year and a half, they had to adopt an amazing array of regulations, and it was a huge amount of work to get done, and he stayed on top of it and was very effective. Then there were a series of scandals. There was the mutual fund scandal. There were other scandals involving conflicts of interest at hedge funds and insurance companies. And I think he was very wise not to get into a pure competition with Eliot Spitzer, but rather to form a coalition, and both of them pursue reform at mutual funds and hedge funds. He's always been aware of what the limits are on compromise and what needs to be done. But for the last year, I think he's had a very unpleasant position. He has been the chairman of a polarized commission. And it's a little bit like being a man with one foot on the dock and one foot on the canoe as the canoe is beginning to pull away from the dock. He had to straddle a very polarized commission. And I think that's probably one of the reasons why he's resigned today.
Professor, we just have a little bit of time left, and I want to get your assessment of what else needs to be done. That's what Donaldson was just saying at his press conference. There's still more work to be done. For the next chairman of the SEC, what's on top of the agenda?
You know, when you look at what the SEC really does, day in, day out, it's a law enforcement anti-fraud agency that enforces the law and cracks down on scamsters. I think the difference between Mr. Donaldson and some of his Republican colleagues is they believe the SEC should reduce penalties and be a kinder, gentler place for public corporations. I think Mr. Donaldson and the Democrats believe that the only thing that deters public corporations is high penalties. And I think Enron and WorldCom suggest that we don't need to reduce penalties or soften the SEC's enforcement bite. But that will be one issue that'll be in front of us over the next couple of years.
All right, well, we'll see what happens when the new man comes in. Thank you, meanwhile, for all of your insights this evening. We've been speaking with Professor John Coffey of Columbia University.
May marked the 24th straight month of expansion in the nation's manufacturing sector, although the rate of growth wasn't as strong as expected. The Institute for Supply Management says its index of manufacturing activity fell to 51.4% in May, down slightly from its April reading. That is the lowest level in nearly 2 years. Economists say today's report raises some concern about the strength of the economy.
There are a number of signs in the economy, leading economic indicators, weak money supply growth, manufacturing indicators, including this ISM, that are really telling us that the economy is not performing very well. And I'm a little bit concerned about the consumer, who's held up better than his income says he should because the savings rate is so low. So I think the economy has really got a lot of question marks.
On Wall Street, a communications snafu led to an early trading halt on the New York Stock Exchange. Trading stopped 4 minutes ahead of the normal 4 p.m. close due to a computer glitch. Trading did not resume and all crossing sessions were canceled. As for the rest of the trading day, stocks moved moderately higher at the open and then really took off after that weak manufacturing report was released at 10 a.m. Comments from the Dallas Fed president that the Fed may be nearing an end to its cycle of rate hikes also fueled the rally. At noon, the Dow was up 112 points. NASDAQ posted a 25-point gain. The rally was blunted this afternoon by a 5% jump in oil prices, but the market still ended on a very firm note. The Dow Industrial Average closed up just over 82 points at 10,549.87. The NASDAQ up 19 points at 2,087.86. Standard & Poor's 500 rode 10 3/4 points to 1,202.22. Bond prices continued to surge. The 10-year note rose 25 seconds to 101 and 29 seconds, sending the yield down to only 3.89%. More now on the bond market. The price on the 10-year Treasury bond rallied and the yield fell to 3.89%, its lowest level since last spring. Suzanne Pratt looks at what's behind today's rally and what's ahead for fixed income investors.
The latest rally in the bond market has come as a surprise to investment pros and novices alike. After all, the Federal Reserve has hiked short-term rates 8 times in the last year, so it might stand to reason that long-term rates continue to climb higher as well. But recently, a variety of factors have helped fuel fresh enthusiasm for bonds. First, there's a growing sense in financial markets that economic activity is slowing worldwide, which should help keep inflation tame. That, in turn, should reduce the need for the Fed to continue raising rates. Slow growth and low inflation makes treasuries more attractive. On top of that, France's rejection of Europe's proposed constitution has created a rush into dollars and dollar-denominated assets. And experts point out that U.S. treasuries still offer better returns than many of their foreign counterparts.
Although long-term rates are getting close to, on the bond at least, historically low levels, relative to rates that are available in overseas government bond markets, you're still getting a very significant pickup in U.S. treasuries.
Surging Treasury bond prices pushed the yield on the benchmark 10-year below the psychologically important 4% level. The 10-year is now at its lowest point in more than a year. That low yield has kept mortgage rates enticing to home buyers, but it also suggests that stocks are likely to be a more attractive investment than bonds in the coming months. Experts say fixed income investors should be cautious, particularly when buying bonds with longer-term durations.
For general bond funds, which include an array of maturities, it's hard to be as emphatic and as excited about a yield curve which features such low yields.
The last time the 10-year fell below 4%, it stayed at that level for only one day. This time, experts say it could stay below 4% a lot longer, especially if Friday's employment report shows new weakness in the U.S. economy. Suzanne Pratt, Nightly Business Report, New York.
Those low mortgage rates have pushed sales through the roof at Toll Brothers. The nation's leading builder of luxury homes recently reported profits more than doubled and sales jumped 52% in its latest quarter. And today, the company's stock hit a new 52-week high. It's now at $95.08, up $2.49. Joining us now to talk about the outlook, Robert Toll, chairman and CEO and co-founder of Toll Brothers. Hello, Mr. Toll.
Hello.
A Fed official today hinted that there's one more rate hike at the Fed. Now, if that is the case, if that's true, what would that mean for your company and for the housing industry?
I don't think much. I think it's terribly overdone to believe that 10 basis point moves or 25 basis point moves influence the public's inclination to buy a home or not.
The Federal Reserve Chairman, Alan Greenspan, just said a couple of days ago that he sees the housing market is frothy, and while he said that there may not be a national housing bubble, that there are a lot of local bubbles. You've been in this industry for 40 years. What are your thoughts on that? Was he right?
I think he's right, sure. There's hot markets and there's medium markets and there's some markets that aren't even moving. I think that in the hot markets where there is a froth, you'll get a blow off and the prices will drop back as the speculating investor drops out of that market when it ceases to continue to increase at rates that are, as Alan would say, overly exuberant.
Now, I know that your company builds luxury homes and the average price tag is something like $650,000, but so when housing prices do come down, and at some point I guess they will, at least in some of the markets you're talking about, what does that mean for your company's earnings performance and sales performance?
I don't think much. We've got a backlog of about $5.7 billion that'll carry us for another year. So far, the biggest drawdown we've had in prices was with the tech implosion in San Francisco, where they lost 170,000 jobs. Within 10 months, we were back to selling homes at an all-time high price. Vegas went down about 9 months ago, but only went down for 3 months, and since then we've been back to new highs. So I think what you'll see is that the speculating investor will be blown away from the market, and then we'll continue on the trend that we have because the demographics are so outstanding.
What about the speculative aspect of this whole housing boom? How large is it? I mean, how many people are out there really doing buying and flipping homes?
My guess is you've probably got 10 to 15% of the market coming from the investor speculator in those markets that have a froth.
As I mentioned just a few moments ago, Toll Brothers stock hit a new all-time high today. Want to get your thoughts on that, and would you be a buyer of your stock at these levels?
Yes, I would, and I think it's just fabulous. Our multiple is only about 11 times estimated PE going forward. The people that supply us, the home building supply companies, I believe sell at 3 or 4 more multiple than we do. So if we approach the average of the S&P, for instance, we would be selling at 18 to 20 times, and right now at 11. I'd say that makes a tremendous buy.
All right. Well, thank you very much, Mr. Toll. We appreciate you coming on the program.
Thank you.
We've been speaking with Robert Toll, Chairman, CEO, and co-founder of Toll Brothers. Hefty gasoline prices, a cutback on incentives, and declining consumer confidence hurt sales at the nation's big Detroit automakers last month. General Motors sales dropped 5%, with truck sales hit the hardest. But GM hopes to change that by offering its employee discount directly to the public on about 30 models. Sales at Ford Motor fell 11% last month on a steep decline in truck and SUV sales. It plans to trim third-quarter production by 2% and boost incentives on some of its slower-selling SUVs. The one bright spot at Ford, Mustang sales jumped 47% in May. Sales at Daimler Chrysler were also down, but not as sharply as its competitors, off only 2.5%. So far, Daimler Chrysler is holding steady on current production levels. Paul?
Incidentally, Ford was among the most active big board issues. We'll see it in just a moment, Susie, as we take a look at our stocks in the news tonight. Most active big board issue on 24.25 million shares, Nortel Networks, down up 19 cents. The company reported a first quarter loss of a penny a share versus earnings of a penny last year, but that does reflect restructuring charges. Sales were actually up 3.8%. Standard & Poor's repeated a whole recommendation on Nortel. Time Warner, an 8-cent gainer. Pfizer moved up 27 cents. Citigroup, 59-cent gain. And then Corning, fifth in big board volume, was up 62 cents a share. SBC Communications fell 9 cents. The company said it's planning to undercut other broadband suppliers by charging new customers only $14.95 a month for high-speed connections. Sprint FON Group up 18 cents. GE, 46-cent gain. Penny rise in Lucent. And JP Morgan Chase showed no change on the day. Hovnanian Enterprises, another home builder, down $1.34 despite higher second quarter earnings of $1.62 versus $1.06 last year. That was a penny above the street expectation. Company sees third quarter coming in at $1.70 and the full year at $7 a share. But I think what hurt the stock is that second quarter new orders fell 2% for Hovnanian. General Mills up $1.09. Bear Stearns upgraded it from market perform to outperform. Terex, the maker of big construction equipment, up $3.64. First quarter earnings jumped to 60 cents from 34 cents last year. Sales soared 39%. Those earnings, incidentally, were 9 cents better than the street expected. Standard & Poor's repeated a buy on the stock. First Marblehead Corp tumbling $9.47. Collegiate Funding Services, a major client, plans to launch its own private loan product. First Marble, however, says its contract with Collegiate will remain in full service until July 2007. Coach Incorporated up $1.63. The Morgan Keegan brokerage began covering the stock with an outperform rating. And Blunt International down $1.30. The Lehman Brothers Merchant Bank sold 7.5 million shares of the chainsaw manufacturer's stock. Elsewhere, we see Laidlaw International, an 89-cent gain. The company plans to replace its credit facility and use its new funding source to retire $560 million in public debt. And Kohl's Corp, the big department store chain, up $2.34. The company repeats its estimate that second quarter same-store sales will be up 4 to 5%, with earnings in the range of 49 to 52 cents a share. Google topped the active list again on NASDAQ, up another $10.73. Today, CS First Boston boosted its price target from $275 to $355. Let's make it $350 even. Intel, 33-cent gain, a penny a rise in Microsoft. Yahoo up $1.22. Cisco gained 24 cents. Research in Motion up $1.08, and a similar gain in eBay. Apple Computer up 54 cents. Dell, 37-cent gainer. 10th in dollar volume was Qualcomm, rising 83 cents. School Specialty up $7.78. The company will be acquired by a unit of Bain Capital Partners for $49 a share. And those are the stocks in the news tonight.
Tomorrow, you've graduated college, and now what? Some advice to new grads about what comes next. Here's a look at what's happening for tomorrow. The latest numbers on first quarter productivity and unit labor costs come out. Also tomorrow, April factory orders and weekly jobless claims. In the Money File tonight, a few thoughts on taking your portfolio global. Here's Harriet Brackey, personal finance columnist at the Miami Herald.
Your dog eats Purina dog chow. You had a cup of Dunkin' Donuts coffee, but the kids prefer Dr. Pepper. There's not a single American company in that list. We're not going global, we already are global. And that means U.S. investors too. In the first quarter, 61% of the new money going into stock funds went into global and international. That's double the proportion of 5 years ago. So, are people shifting toward international at its peak, chasing the hot market sector? Or is it time to face it? The U.S. isn't a fast growth economy anymore, and the winners will be in China, Thailand, Brazil, and beyond. Here's where I come down. It is time to invest in the world the way dynamic companies do. Investment advisors are telling people 25%, even 40% of their equity investments overseas isn't as risky as it once was. But it would have been a lot smarter to go global a few years ago because prices today are high. Over the last 3 years, international and global funds have done twice as well as U.S. stock funds. Emerging market bonds outperformed investment-grade U.S. corporate bonds by 8-1 in the last year. So if you're just now catching up to the world, do it gradually. Anything that's so good will no doubt sink, and anything that's been down as far as boring old U.S. brand names may make a comeback when you least expect it. I'm Harriet Brackey.
And that's Nightly Business Report for Wednesday, June 1st. I'm Susie Garib. Good night, everyone, and good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
Objective financial advice. It's right for any nest egg, regardless of size. A.G. Edwards. For 118 years, fully invested in our clients.
Additional funding has been provided by
Buying or selling a home is a big financial decision. A realtor can guide you through the process and help you reach your goals. Is your agent a realtor, a member of the National Association of Realtors?
This program was made possible. Contributions to your PBS station from viewers like you. Thank you.
Stay with OPB. The News Hour with Jim Lehrer is next.
For more information about investing, you may order Nightly Business Report's home video, The NBR Guide to Buying Bonds. This program is available in either the VHS or DVD formats.
We are PBS. Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. Safe Corporation, preventing workplace injury.